So I'm Julie VerHage from Bloomberg, and this is Ryan Williams from Cadre. And I remember I've covered fintech for a while, but I hadn't necessarily heard of you guys as much as like a SoFi or a Cabbage, because right now I'm not your target market. It's someone else. So talk a little bit about what you guys do and who you are actually, who's using the platform.
Sure. So you might be sooner than you think our target market, but Cadre is a digital marketplace for commercial real estate. I started the company a little less than 4 years ago, and the idea really is we want to provide greater access to one of the most important asset classes to build multi-generational wealth. Historically, it's been really accessible to the 1% of the 1%, and we're unlocking access in a methodical way. So to your point today, our primary target audience is accredited investors. We've created a product where they can invest on a deal-by-deal basis, so they can go onto the platform and invest in a building like they'd buy something on Amazon or any of sort of the e-commerce platforms today. But we've also built more of a portfolio-level solution as well. And the focus is build critical mass, build trust, really at the top of the investing ecosystem. As we create that trust, we'll have the opportunity to create greater distribution to more than just the institutional and accredited folks. And we're actually more aggressively making traction and progress than we even anticipated. So that's why I said it might be sooner than you think that we're unlocking access for even more people.
Got it. So what initially got you interested in real estate in the first place? Because it's not an area that lending, sometimes people just had a bad experience, or insurance. I know the founders of Lemonade, they had bad experiences with insurance and stuff before. What made you decide the real estate market needs to be changed?
Yeah, well, I think the fact of the matter is real estate's omnipresent, but it's also one of the most Jurassic, imperfect industries in the world. It's also one of the most opaque industries. Chances are 90% of people in this room alone would have zero idea what the value of this building is. And when I really started sort of peeling the onion, I saw that there were really a small number of folks who actually had access to this asset class. And if you look at commercial real estate relative to the S&P over the last 20 to 30 years, greater than 15% outperformance, 50% less volatile. So you have this paradigm where it's an asset class that's everywhere. Most people have no idea how to access it. And the implications for not having that access are actually really, really powerful and significant. It's the difference between multi-generational wealth and not having multi-generational wealth. And I was really fortunate to have the opportunity to work at Blackstone prior to Cadre, and I got to see firsthand really what many people consider the gold standard of commercial real estate investing to be. And I noticed there that there was a lot of great things we did. There were also a lot of opportunities to increase distribution, access, et cetera, and technology could be that catalyst. So both just from being a human being on this earth and seeing real estate everywhere, as well as seeing the platform that many consider to be the best in the world, and seeing that it was actually pretty restrictive. Those kind of dynamics all converged about 4 years ago, and was really fortunate to be backed by a handful of great folks that have helped us accelerate our momentum today.
Got it. So for anyone in the audience that's a VC, someone like me, why should they buy real estate on Cadre versus Blackstone, your former employer, or go invest in a REIT or something else? There are other ways to invest in real estate.
Yeah, so there's really three kind of primary ways to invest in commercial real estate. First is going direct. The issue with going direct is most people don't know the best operating partners to partner with, and it's really tough to find folks. So you have this dynamic where you oftentimes have adverse selection, right? Where the only people that you actually can partner with are the ones that can't really raise money with anyone else. So that's the first way, not great in terms of just the network. The second way to invest in real estate is through REITs, and REITs are great. They're stocks effectively, and so you don't really get the diversification that you oftentimes seek when you're investing in real estate relative to the equity market. There's also issues with fees and incentive from management folks. You don't get direct access at the asset level. You're investing effectively in a company or corporation. And so from those perspectives, plus less tax benefits, it's not great as well. And then the third way, to your point, to invest in real estate is by investing in funds. My past life, I worked at a great fund, and funds have really dominated the market, but they're oftentimes associated with high fees, lack of transparency, and when there are market swings, investors are prone to those market swings without optionality to get out. So there's no liquidity. And so what I saw at Cadre is all the existing models today, they're there, but none are really as efficient or as powerful as they can be. And so what we're doing is we're taking sort of the best of the direct sort of opportunity, right, by providing transparency to folks, the best of the REIT space by building liquidity, and then the best of the fund world by creating this institutional rigor. And as a result, it's what we think is the next generation of real estate investing with lower fees than a traditional fund, up to 40% lower fees, because we've removed a lot of the intermediaries and middlemen through technology, greater transparency, and liquidity. And liquidity in a way that we think will really usher in a new generation of folks who can actually participate in the ecosystem.
Gotcha. So what kind of properties are actually getting put on the platform? Is it commercial? Is it single-family homes? What are people investing in?
Yeah, so it's really commercial. We're not doing that much in residential or single-family homes. And commercial to us is primarily office, multifamily, hospitality, student housing, retail. These are all asset classes that are operator-driven, right? Where an operator or manager can, similar to a stock or a company, drive out performance. And especially in this market environment where valuations are at an all-time high, you really want to be able to depend on the operators themselves. So those are the kind of asset classes we're focused on. We have an incredibly high bar in terms of the number of deals we actually approve. We have a roughly 2% conversion rate on the platform. So we see billions and billions of volume. Operators submit it through our platform and our system. We're really only providing access to the best of the best. We have a great investing team. Chairman of our investment committee is Mike Fascitelli, who used to be CEO of Vornado. And Mike always emphasizes pristine sponsorship and great product and really high underwriting standards. So the way we think about it is we're actually delivering what's in many ways a diversified pool of commercial real estate opportunities that you'd only otherwise get if you had access to a large fund, and doing it in a more consumer-like way, in a more digestible and a more transparent way.
Got it. So commercial real estate, like you mentioned, is at all-time highs, and Silicon Valley also loves to see 300, 400x growth each year. How do you continue to grow at a very fast rate when it's hard to find properties to invest in?
Yeah, it's a great question. We're really fortunate, frankly, and we're grateful for the folks that have backed us to date, because they understand that this is not a sprint, it's not a marathon, it's a fast-paced marathon. And they understand this is a long game. And the folks that focus on quality out the gate will be the ones who ultimately emerge 5-10 years from now as the winners in the space. And so what we've been able to do is continue to be really methodical, but start at the sort of top end of the market, right? Where we're investing in larger assets. So anywhere from 50 million up to a few hundred million is the average size of a property or building. The work to do, similar to VC, a small deal is pretty much the same as a large deal. And so we're really kind of increasing our minimum equity checks so that we can drive critical mass, scale, build economic sustainability, and build sort of that beachhead. And our beachhead becomes a profit driver, not a loss leader, giving us the opportunity to invest in growth and scale the marketplace. Because this current business model is really a digital real estate investment platform. We're not naive, we don't pretend to be anything else. But the next phase of the business that we're building too is a curated marketplace. But to get there, we've got to build trust. We've got to make sure Cadre is seen as the highest quality solution in the space. And then we'll be able to drive distribution, such as what we did with Goldman Sachs.
Got it. How's that going so far, by the way? That was,
Great.
What was it, 250,000?
So we had an initial close of 250 million. And we were really grateful to Goldman and their entire private wealth network. Frankly, we were surprised the partnership sort of came to fruition as quickly as it did. We were really talking to a handful of banks and institutions about giving their private clients access to invest either deal by deal or in a portfolio. And Goldman stepped up. They're investors in the business. They've seen firsthand our performance, the traction, the team that we've been able to bring together. And we went on a roadshow, met a handful of their clients, and had a really great initial close. We're continuing to raise capital with them and with other banks. And for us, the way we think about this opportunity, similar to other real estate tech companies, is there are a lot of great ideas in commercial real estate tech, because there's so many inefficiencies. We could literally walk around this building. I could probably point out 3 to 4 new business opportunities. But the winners will be the ones that can ultimately create distribution and scale. And on the demand side, that's exactly what the Goldman partnership represents. We're now in the process of actually thinking about supply-side partnerships that are comparable, where we go to large owners of real estate. For instance, SL Green, one of our investors, biggest office landlord in New York. We've discussed partnerships on that front with them. And I think, again, you'll see the emergence and evolution of Cadre from digital real estate manager to marketplace as we begin to create more of these distribution partnerships.
Got it. Does that also mean there could be stuff outside of real estate on the platform eventually?
Definitely. I mean, the vision is really about improving access to the broader universe of alternative investments. So commercial real estate is one asset class. I chose it because I had experience in the asset class, plus in technology. I chose it because it's relatively homogeneous, so it's easy to operationalize. But we want to be that one-stop shop for anyone's personal financial P&L. We're starting with investment products to date, but there's definitely other real assets that we've already begun looking at. There are opportunities across the capital stack as well that we've begun thinking about beyond just equity, especially where we are in the market today. And the vision is definitely to be, a broader alternatives platform than just commercial real estate.
Got it. And now I know there's a wait list to use your product too. How is that going? Are you able to, bring on people a little bit faster now, or?
Yeah, it's the marketplace challenge, supply and demand in terms of the balance. I tell you probably 2 years ago, our issue was demand, then it flipped to supply, then it flipped to demand, and now it's kind of back to supply again, and I'm sure it'll flip again as we offer more products. What we've begun doing and really thinking about is, because our deal-by-deal opportunities sell down relatively quickly, is there a way, and this actually was inbound user feedback, is there a way to give people basically preferred or locked-in allocation? And this was sort of a realization we had a couple years ago. And the answer is yes. The answer is we begin giving them diversified access and really more of a portfolio level strategy. So you get, instead of one deal, we were putting in a couple $100K, 12 to 15 deals where you're putting in 25 to 50K. And so what we've done to try to counterbalance that dynamic is start offering this managed account for more of our accredited investors so they can get that locked-in allocation. But it's definitely a tension and it's definitely a challenge, and we're fortunate to have that as an issue. It's a good problem to have.
Yeah. No, a lot of people, obviously, you have to get access to the platform to understand exactly what it looks like. Explain a little bit. So say I do get access and I want to go invest in one of the properties you have listed. What actually do I find out about that property before I buy into it or not buy into it?
Yeah, you find out probably way more than you'd ever want to know. And the idea behind Cadre was, today the bar is really low in terms of just transparency based off 3 different models you can invest in. We really wanted people to trust the platform, trust the system. We wanted them to know when things are good, when things are bad, when things are sideways, when they're not. And to that end, what we've really done is created this really immersive, engaging digital experience where you log onto the platform, you get all the information you could ever want to know, whether it's financial information, historicals, whether it's market level information, whether it's information about the operating partners, and we have more than 300 operating partners who bring us deals on a pretty active basis, whether it's information about comparable trades and transactions. We even create our own content where we're actually going out to the assets and looking at the surrounding markets, where we're looking at the information about tenant-based rent roll, et cetera. And so you get, almost like a digital offering memorandum on steroids, plus, video content that gives you all the clarity you'd want to be able to make a good decision. And over time, what we've been able to do is also create effectively a recommendation engine for people's financial futures, where we're learning insights about your strategies, we're connecting your strategy to certain opportunities that make sense. And so over time, the platform evolves to a point where you should be able to invest with the click of one button and rebalance and recalibrate as your life circumstances change as well.
Got it. Now, another thing that fascinated me the first time that I met you is you have a lot of very important people that you've just networked with throughout your career. Like Anthony Noto was your team lead at Goldman Sachs. Mike Fascitelli is someone that you met. You were friends with the Kushners in college, and they helped you start Cadre and get it off the ground. How have you gone about building those relationships and then just convincing them to, continue to give you advice throughout all these years?
Yeah, what I've found is, and I learned this growing up, and I learned this from my parents, is output's never greater than input. And so I've been pretty tireless. So for all the people that have worked with me and partnered and mentored and advised and given their time, there's a whole lot more that haven't. And so I continue to just reach out to folks and never reach out with just an ask. I try to give wherever I can, and I try to give insight into my thinking. So with someone like Mike Fascitelli, Mike has the opportunity to do whatever he wants pretty much, and I think he took a liking to me and to Cadre because he saw the evolution that was happening in the real estate space. He saw how tech was transforming the entire ecosystem, and it was pretty exciting and fun for him to get that sort of insight and opportunity. For other folks that have partnered, whether it's Andrew Mathias from SL Green, whether it's the General Catalyst folks, Joel Cutler, Ford Foundation, Darren Walker, Goldman Sachs, same kind of dynamic where I think they're really excited that we're on the cusp of what I think will be one of the greatest revolutions in the financial investing space. I think you'll see a dynamic where 10 years from now, some of the top financial institutions will have .coms after their name, and a lot of these people want to be on the cusp of that. So I think it was really symbiotic in terms of the partnerships, the network. You know, we said one thing, this is what we're going to do. We executed on it as a company. The momentum and the progress has grown, and it became a self-fulfilling prophecy. And I think that people have seen, you know, vision without execution is hallucination, and we're executing better than we ever have.
Got it. So is Cadre an IPO candidate, or would someone like a Blackstone just step in and be like, you know what, Ryan, you built a great company, great technology, we want you to come back and we're just going to acquire you? Yeah,
look, I don't really have a view on that right now. We're taking everything day by day, hour by hour, and but I think, you know, if we execute, you know, we'll have all the opportunities in the world. I will tell you sort of an interesting quick anecdote. I was meeting yesterday with one of the largest real estate brokerages in the world, rather, and their CEO came, their head of technology came, and they kind of just want to listen and hear what it is we're doing and the progress since we've launched the platform, and growth and scale, and how we built the team that we built and the network. And one of the fascinating things that I heard as we ended the conversation was the CEO said, you know, heard a lot. This is one of the most exciting companies and platforms I've ever learned about. You know, the reason we reached out is because, you know, we realized we have to reinvent ourselves. And we understand that, you know, we're going to have to self-cannibalize, but if we don't do it, someone else will. And so I think what you'll see in general is a lot of these institutions that have been built on something other than technology or have a technology engineering culture will try to reinvent themselves, and I think they're seeing the writing on the wall. And so our view is our opportunity is greater than it's ever been. We execute, we'll have those kind of opportunities plus many more.
Aren't you kind of scared to share any information with these guys, though? They could just go and try to copy
so
it.
Look, I think, you know, I've thought about that a lot, and there are a lot of folks who don't have an incentive to see us succeed, which I understand because we're disrupting and transforming and changing. I think there's this spectrum where you kind of have a spectrum of like partnership to disruption, and the approach we've taken at least is we want to be closer to the partnership angle and end. And it goes back to my view that the winners in the space are the ones that will be able to create the greatest distribution and have the best partnerships and scale, not the ones that are going to try to reinvent what Goldman's done over decades in terms of building clientele bases or some of the brokers have done in terms of building capital markets expertise, but be that platform and that exchange that can connect supply and demand. And so, yeah, there are instances where I'm like, maybe I'm telling them a little bit too much, or maybe, but at the end of the day, we're really confident in sort of what our core competencies are, and you know, the mission that we're looking to achieve of improving more people's financial futures. And I think it can be, in most cases, a 1 + 1 = 3 dynamic with some of these institutions. But we're still sensitive to what we share, for sure.
So you've already partnered with Goldman, and you mentioned that partnerships are something you want to continue to do. Would that be another bank in the future? I know SoFi wants to offer real estate-like products on its platform.
Yeah.
What is that going to look like for Cadre in the future?
My instincts, there will definitely be additional banks that we end up working with and partnering with. You'll be one of the first to know when we actually make that happen. There's also really interesting opportunities in the RIA space as well. It's a really fragmented space. No one's created great technology in our view or distribution to great investment products. And so we think that's an opportunity. There's also a really exciting opportunity in sort of the technology space itself, right, with companies like Google and Facebook. We think that there could be an opportunity to actually provide products to their employees. There's tax benefits clearly to invest in commercial real estate. We think there are platforms, you know, whether it's the Adipars or the Wealthfronts, the Betterments of the world, that could be great partners for us as well. And it goes back to we know what our core competency is today, and it's offering more transparent, liquid investment products than anyone else, and in a quality way, right? And I think that that's enduring. Folks are going to sort of flock to products, and I think there'll be a lot more of those partnerships, starting with some more banks.
Got it. All right, it's time for over underrated. Are you
ready? All right. Yeah, she warned me about this.
This is the only part we didn't really fully go over a lot of these.
Okay.
So we're good.
Ready.
Crowdfunding.
Crowdfunding.
Over underrated.
So I'm under for sure on crowdfunding. I think that I agree with the principle and the concept of leveraging tech to create more distribution in the real estate space and just in the investment product space. Clearly that's what the thesis behind Cadre is. What I disagree with is the approach that most of the crowdfunding platforms and real estate and otherwise have taken. There's a ton of adverse selection that happens today. I believe we're on the cusp of seeing a lot of bloodshed in the crowdfunding space. I think we're going to see a lot of consolidation and, in some case, extinction with a lot of these platforms because they got out the gate pretty quickly, and it was a great social mission to improve access. But what are you improving access to? Right? It's about the quality itself. Otherwise, it's better, frankly, never having access in the first place. And so I'm definitely under on crowdfunding. I think that in addition to the adverse selection, the alignment is just oftentimes not there when you're offering these products. We've raised a $250 million backstop from a large family office / hedge fund that's allowed us to guarantee the funding of the deals. Our team actually invests, and I've allocated capital from our balance sheet to subsidize the cost for our employees who otherwise wouldn't be able to participate in investing. And I think you see a lack of alignment with a lot of these crowdfunding sites. And then there's the liquidity issue as well, right? When there's swings in these product offerings, again, people are prone to those swings without the optionality to get out. And because of all these dynamics, plus where the market is today, definitely under. But I do think there will be an opportunity at the right time to really go retail. But it's really where do you start, and what are you offering at that point with which you start?
Got it. Blackstone.
Yes.
They're overrated?
No, I don't. Look, I think Blackstone is really trying to trip me up with these questions. You just said Blackstone. I'm like, okay. Blackstone is an incredible platform. I learned a ton there. Wouldn't have traded that experience for the world. I think that, to their credit, there is a greater focus now on technology that's happening. They've made some VC investments. I think, to their credit, they've really begun expanding sort of the offerings they provide. They launched the B-REIT, which effectively is more of a retail product, right? So there's a lot of similarities in our investor base and what they're doing there. And I think they have incredible leadership. John Gray is a visionary leader, what he's been able to do there. And if you look back to sort of the real estate private equity landscape 15, 20 years ago, Blackstone was not the behemoth it is today. Mm-hmm. And so in many ways, they've actually had a really incredible entrepreneurial journey, great leadership. Platform has become an advantage from a scale standpoint for them. And I think there's a lot to be learned, frankly, from what they're doing. We're taking a different approach. We're building somewhat of a different culture as well, where technology is kind of the first and most important constituency of our company. But I think they've done an incredible job from a scale standpoint, and there's really not too many folks that can even touch sort of the platform they've built.
Got it. All right, one more since we're already over. Blockchain.
Yes. So you should have done this one earlier because I could go on and on about blockchain. We've spent a lot of time in just the broader crypto space and blockchain. I think that similar to the crowdfunding dynamic, it's ultimately about the quality of the products that are being offered. And I think blockchain will have some applications, even in Cadre's space and business model in the future, not sort of the immediate future. I think there's benefits of distributed ledger, for sure. We're building a marketplace, but we've actually been able to architect our own ledger itself. I do think the token space is super interesting. And I think it's interesting because it can operationalize a lot of the sort of unique processes that happen today and a lot of the inefficiencies that happen with just closing, settlement, AML, compliance, KYC, et cetera. But again, I still think we're early. I think that there's a lot of legal and regulatory hurdles that also have to be overcome. And so our view at Cadre just about the broader crypto and blockchain space has been there will be an opportunity, at a point of scale. There will be an opportunity when the legal regulatory environment clears up a bit. And we are definitely an entrepreneurial culture. We definitely experiment. We definitely test and try. But we'll never do experimentation or testing that's irreversible or that can result in subpar products and access for our users. And so we have our view internally on the right time frame and the right timeline. I don't think it's now. I don't think it's 10 years from now, but I do think that It's going to really be about the ultimate end product that's being offered, as well as the ecosystem one can build. And whoever builds the biggest ecosystem, I think will ultimately win, and I think it will be disruptive, even to some of the models in the real estate tech space today.
Got it. So overrated short term, underrated long term.
Yes.
Got it. All right. Well, thank you guys. Thank you,
Thank
Ryan.
you. Thanks, everybody. Thank you. Appreciate it.
Yeah.